The research analysts and economists at Financial Derivatives says oil prices are currently dangerously low for Nigeria. Well, our budget, 44.50. Oil, Brent crude is trading around 45. U.S. crude now at 42.44 as we speak. It's very dangerous times. Let's have some dangerous conversation with Amaka Ajegu. Good morning.
Good morning.
Are we panicking? Is it time to hit the panic mode?
Yes, it is. Because,
yes, it is.
Yes, because currently this morning, Brent is trading at 44.8 to 80 cents. So that is giving you a headroom of barely 30 cents for the budget revenue. So, yes, policymakers, market players, everyone is on edge because a bulk of our recovery plan and prospects for recovery is hinged on the performance of oil in the global market. So yes, it's a time to panic. A
very bad situation we have on our hands. But again, if you look at your good news and bad news, this is the first time in recent days that you guys have more bad news than good news here.
Yes.
And that's
yes, it is. Because this is the first time oil is closing below $45 in the year of 2017. So we're going back to OPEC announcing their intentions to induce those quotas for member countries. So yes, everyone is a bit on edge at the moment, and many analysts, even ourselves inclusive, believe that this is not yet the low. So oil prices have not yet reached the lowest point in the short term. So yes.
Sometimes I'm in the mood looking for someone to blame. So you know what the question is. Who do we blame for spoiling this party that started in November last year? Of course we know when. The agreement between Russia, it took a lot of time to get Russia, Iran into the same room, lock them up with Saudi Arabia, with Nigeria weighing in very strongly with Kachiko and the rest. Bakindo, who is now Nigeria's OPEC SecGen, to get that deal. And prices moved 45, 50. We did 52. We were about 56. Some folks were saying, we're going to do 60. Maybe. If we're lucky, we'll do 70. Now the party looks like it's over.
This is the worst negative sentiment we've seen in recent times, in the past 20, 30 years.
Who do we blame?
Right now, the investors, short-term investors, are not happy with the fact that the OPEC didn't deepen the output cuts. They only extended it by 9 months. So they were expecting, further increase in quotas that would wipe off a significant chunk of outputs, all outputs in the market.
1.7, nearly $1.8 million was the cut.
Yes, 1.8 million.
So when they met in May, just last month, they said, okay, fine, we're keeping this 1.8 million.
But we're going to extend to March.
The deadline till March next year. So short-term traders were looking for, maybe OPEC should have gone for the 2 million, perhaps.
Yes, or even 2.5 million. So yes, the investors are currently punishing the market, if you would say so.
Punishing the market for not doing that.
And also U.S. shale producers are having a field day, because I remember
I thought you weren't going to mention the United States.
No, a few months back, I remember in this segment, I spoke about how their costs have declined over the years. So now they can afford to produce, even though oil prices are declining at the rate they're declining. So yes, U.S. shale producers are really inducing this fall in oil prices.
The U.S. is producing massively. This is what Bloomberg reporter says. Oil production in the U.S. is now 9.35 million barrels per day, the highest level in almost 2 years.
Yes, this is true. And also, we have to take into account the fact that countries like Libya, Nigeria, and Iraq were exempted from the output cuts. Libya is trying to meet a target of 1.2 million barrels per day by August this year. At the moment, they are currently producing at 900,000 barrels per day. So this and also reports from Nigeria as well, the relative peace we've been seeing in the Niger Delta, and also the opening of the Bonga and Forcados fields is anticipated to increase our level of production in the coming months. So yes, the markets are not too pleased about this.
So we are part of the problem. So blame Nigeria as well, isn't it?
Not necessarily. We need to produce to earn money to fund our recovery agenda. So when we're to blame in the sense, yes, we are driving the oil prices down, but at the same time,
we're part of the glut in the market.
Yes, we're part of it, but we need
amazing that vessels are sitting idly on oceans around the world with millions and millions of barrels of oil that nobody's willing to buy.
Yes, as you can see, also in Asian demand is declining dramatically. We can see declines in import demand for crude in India, in Japan, and also in China. So yes, the demand fundamentals are also not helping matters.
Okay, how do we, what, with the benefits of hindsight, this is the last question, do you think that perhaps with the budget we should have stick with $42 a barrel instead of the legislature's raising it to $44.50? I'm looking for someone else to blame.
No, at that time it made sense to increase the budget benchmark to 44.50 because oil prices were trading higher at an increasing pace. But right now, what I can say, the only good news I can give to the Nigerian public right now is that if you're bullish on global growth this year, then you have to be bullish on oil prices, on oil, because oil is still going to be a major source that will push global growth to the point into which we anticipate. So long-term investors are still keeping their positions. Why you're seeing this movement now is that short-term investors are not happy with the current glut situation. But if you're bullish on global growth, then you are bullish on oil.
Okay, well, some good news there to wrap it up. Thank you very much. We appreciate that. Let's check together again next week and find out if something happened over the weekend to make the short-term oil traders a little bit happy.
Yes.
Amaka Ajebu, one of the research analysts at Financial Derivatives Company here in Lagos.